So right now, the big buzz is stablecoins. They're everywhere. Big banks are launching them. Big enterprise players are also looking into them. Corporations. We've been talking about stablecoins for a bit of time now, especially with ROUSD and things like that. And it's definitely for, a good reason, especially with even regulatory clarity becoming a big deal in the US for stablecoins. But what if I told you that it's not just stablecoins that we should be focused on? In fact, Standard Chartered, which is a partner of Ripple's, they did say that stablecoins still rule RWA tokenization, but perhaps not for long. Standard Chartered sees private equity and commodities as the next big on-chain opportunity as regulation starts to clear the path. Now, yeah, this is something that I have been really kind of focused on, is how big tokenization actually will be, especially once all the guardrails are up in place and all of these big players don't have to worry anymore about regulatory scrutiny or, anything really kind of holding them back. We also just witnessed, right, the acquisition of a $75 million oil and gas facility in Latin America, which also facilitated by tokenization stablecoins on global settlements platform as RWA trend expands. This was big because we now have $75 million in oil and gas tokenized. This whole deal is tokenized on chain. How crazy is that? We're just starting to see the big moves happen that are a little bit more uncommon as well. Main things were like real estate or, commodities, maybe some stocks, stablecoins obviously as well. Now we're starting to see much bigger tokenization moves happen. And also what's interesting about this is more recently, American Banker did interview Marcus Impinger from Ripple. And we have blockchain-based tokenized financial products are rapidly advancing into asset classes like private credit and commercial real estate. American banks must lead before global competitors set the terms. This is Marcus Impinger saying this. We have over here from Marcus himself. He said, I believe tokenization can be a turning point for financial institutions. Real assets like bonds and private credit are moving on chain. This isn't about speculation. It's about leveraging public blockchain technology to enable faster settlement and broader market access. The shift is already underway. And yeah, what's crazy about this is that we're starting to see more and more institutions actually participate. JP Morgan recently launching a tokenized deposit token. That's huge. That's telling us everything that we need to know about the next wave of adoption, which is going to be every single big bank also launching a deposit token. But it's also going to be everything, right? Like everything that we know of will be tokenized. We are at a crucial moment for tokenization. A crucial moment where everyone should be paying attention to, specific networks. In this case, I do think that the XRP ledger should 100% be focused on, especially with all of the big moves happening around tokenization on the XRP ledger in Dubai, for an example, or even in the US. Now, on top of this, also over here we have from Subjective Views, some really key points by Sandy Cole, head of digital assets at Franklin Templeton. What we're really seeing is the next iteration and the next evolution of financial market infrastructure. That's exactly what this is. When we think about what's actually going on here, everything around finance is changing. Let me just go back 1 second, right? Because if we think about what's moving on chain, like, yeah, real estate is also moving on chain, but think about everything else. Bonds, private credit. We already have fiat currencies on chain. This is finance. Finance as a whole is moving on chain. So yeah, Sandy is 100% correct here. But check this out.
Why is it so important? Is because what we're looking at is a transition that's happening in the way that our economy works, right? We have been in a account-based economy pretty much our entire lives, right? Banks, you have a checking account, you have a savings account, you might have a brokerage account, you might have a retirement account. These are all separate accounts. And each of these accounts is kept on its own ledger by whatever organization you hold it with, the bank, the brokerage firm. It's all very fragmented. We're moving away from that, Scott, to a wallet-based system. And that wallet-based system is one where all your assets sit in your cryptographically protected wallet. And if we want to move cash around in that system, that is the role that stablecoins are playing. It's bringing the fiat currency out of today's traditional banking system or brokerage networks, and it's moving it into this wallet-based ecosystem, which is where the crypto blockchains exist, where the cryptocurrencies exist, and this is why stablecoins are so important. They're both the on and off ramp, but more importantly, they've really become the liquidity vehicle to keep assets in this wallet-based system.
Matt Hogan gave me almost the exact same answer yesterday from Bitwise. Similar, he said, I don't think people are ready for the fact that everybody is going to have a wallet, and this is the way that we're going to interact. And hearing you say it really reconfirms that. And then I made the point, it's not just a crypto wallet. There's also going to be tokenized everything. So it's likely where you're going to also trade your stocks and manage your portfolio and take loans and earn yield. I mean, is that the future where we can literally get all financial instruments into one wallet, and it will be effectively blockchain will be the underlying technology of that?
100%. I mean, this is exactly where I think we're headed. And it's going to happen a lot faster than people anticipate, right? I mean, this isn't going to be a 10 or 20 year transition. I think that we're going to see more progress in the next 5 years than we've really seen in the last 50 in terms of reconfiguring the way that the financial markets work. The last time we had a period like this in our history was when they had the paper crisis in the late 1960s. And they actually then invented the whole system that we've been using for the last 50 years, using the leading technology of that day, which was the computing technology, right? And so that's what allowed us to immobilize and dematerialize securities. That's what allowed for the creation of these centralized clearing, utilities that we see, like the depository trust company. And that's what led to today's account-based system. So what we're really seeing is the next iteration and the next evolution of the financial market infrastructure.
Its depository trust company, the DTCC, is very publicly testing blockchain technology.
Right.
They're doing it right out in the open, effectively, I think, trying not to become the next Blockbuster or Kodak or Sears Roebuck, basically disrupting themselves before they get disrupted by the industry.
And she is 100% correct, right? It is going to happen a lot faster than anyone actually thinks. She said that in the next 5 years, we are going to see changes that we haven't seen. Like, this is going to be much bigger than in the last 50 years. So we're going to see the equivalent of 50 years of growth happen in 5. That's how accelerated and how fast things are changing right now around this market and around finance as a whole. And yeah, every single financial, anything of value, right? Every single financial instrument will be on chain. The DTCC is moving on chain. They just hit $100 trillion in assets under management. They move over $3 quadrillion per year. They're actively testing blockchain. They're actively jumping in on tokenization use cases. Like, I really don't think people realize what's happening right now. And if you did, I mean, you would just quickly understand what's going to be happening in the next few, months, in the next few years as well. We are in for a tsunami of money flooding on chain. And we are also in for some very significant announcements. Now, on top of this, if we go over here, remember this post. I'm not going to play this video. It's about 2 minutes long. It's going to be, it's kind of a waste of time to play this because you guys probably already heard it multiple times. But Bitcoin is the greatest distraction from the greatest disruption that is coming to financial services. This is what the CEO, Jenny Johnson from Franklin Templeton, said to us. Because if we think about what's happening in this space, a lot of what we hear from Franklin Templeton is not going to happen on Bitcoin. It's also not going to happen on Ethereum. It's going to happen on these other public blockchains. And I also even said that $23.4 billion roughly is on chain right now. We're going to 100x that. Why am I so confident on that? Because of this. June 17th, JP Morgan met with the SEC Crypto Task Force to discuss crypto regulation and the potential impact of capital markets moving on chain. What's even crazier about this is over here from Nate Drolsey. He actually put out the post that outlines the agenda and the participants as well. We have JP Morgan met with Crypto Task Force today. Guess what one of the topics was? Reviewing the potential impact of existing capital markets activity migrating to public blockchains. Read that again. Yeah, that's massive, because when we think about what's going to be happening here, we're going to see traditional financial markets migrate over to public blockchains almost instantly. We just need the green light around regulations, and almost overnight, all of this will be moving on chain. We might not see all of the money on chain immediately, but it is going to start overnight. These things are going to start to migrate over. We're going to start to see the biggest names out there around finance moving on chain, accepting and adopting the fact that, guess what? Blockchain is here to stay. This is the biggest technology revolution in history. And they're already here. Most of them are already here. And what's crazy about all of this is that JP Morgan, we have over here, big shout to Subjective Views again, major institutional players like JP Morgan recognize that crypto networks are the future of value transfer. They're now openly admitting it because they have been utilizing this tech and trialing this tech for years. Check this out.
When you think about the effect for the industry, what does that signal beyond Bitcoin? Does it give more credence in terms of the path and trajectory for, say, Ethereum?
Absolutely. I think, with sort of these, obviously with the regulation, but also with these big institutions that are saying, okay, we're going to put we're putting our hat in the ring. I think what it means is that the industry understands that this is the future, right? And, for a long time, proponents in the crypto space have sort of, evangelized the sort of benefits of sort of blockchain and sort of digital currencies. I think now the industry should understand that this is where the path is going, right? And so for the JP Morgans and other big institutions, I think now they're sort of saying, look, we need to get a part of the program, and it doesn't surprise us, right? We at Wave have been meeting with many institutions that are trying to find their path in digital assets and how to sort of strategize. And I think, in 5 to 10 years, basically, majority of institutions will be using crypto rails or sort of digital ledgers to sort of help do better efficiencies of their processes and transmission of capital and utility.
And yeah, almost every single one of these institutional players will be on chain. Just give it a couple, months, give it a couple years. All of the banks will be on chain. And I also mentioned the $24 billion already on chain. I said that's the total value of RWAs on chain at this moment. With a total addressable market valued in quadrillions of dollars, we didn't even get started yet. Even diehard crypto holders barely realize how big this space will be. Everyone is missing the big picture here, which is the fact that trillions will soon flood on chain, and they won't just sit there. Think about the network effect that Bitcoin experienced, which allowed it to go from cents to $100,000. Now think about what these utility networks could do, right? But on a scale of 10x to 100 times or even more. We will have trillions being traded 24/7, 365. Every single market from real estate to debt will be tokenized. Money itself will live on chain. Stablecoins are the big confirmation of what's coming. And the fact that we have governments fully embracing them is the signal. Stablecoins are bringing fiat on chain. This is the digital currency revolution. Focus on the projects that have the most utility. I'm looking at, and I outlined all of these great utility projects and a few others. In time, these networks won't be valued in billions. They will be valued in trillions. This is much bigger than anything we have witnessed in history. And just like we heard from Franklin Templeton, right? This is not going to take 20 years. This is going to happen much faster than what anyone actually thinks, because the big players are already here. We're already starting to see accelerated tokenization moves. And JP Morgan having this meeting with the crypto task force is extremely significant to focus on, because this is giving us an insight on what's happening. We're starting to see the migration over to public blockchains. So with that being said, I hope that you guys enjoyed this video. If you guys definitely leave a like, subscribe, turn notifications on because more free content. You guys are more than welcome to follow me on Twitter and join the free Discord in the description below. And with that being said, guys, it's been Nick. Thanks for watching. Peace out.